Okay, everybody. Looks like we're going to get started. My name is Jeff Gibby. I'm going to kick us off. Ken is somebody I consider a friend. I see him at the trade shows. Very good instructor on day trading, and somebody I think that we should have in the room more often, to be frank. So we're very, very happy to have him in here. He's been in the market for a very long time. Definitely knows a lot about day trading, and kind of he's got a great lesson prepared for us. So, I'm going to get out of the way. I'm going to let him talk about it, and we'll go ahead and bring him in. Ken.
Hey, thanks, Jeff. It's a real pleasure to be here. I've known you for years, and Jeff Gibby's a great guy to work with. A real honor to be here on behalf of MetaStock and participate in presenting to everybody. We're going to cover both day and swing trading strategies in today's event. So,
it's broadcasting. Yeah, we can see.
You can see how to trade high momentum breakouts.
Mm-hmm. And I see this really handsome guy in the lower left-hand corner.
Hey, well, thanks so much. That's what the wife says. I appreciate that. And you can see MetaStock, so that's good. With the market sell-off today, I hope you guys are trading the bear or the inverse ETFs, which go up. Kind of a hint. I'm a real trader, so I work off my actual trading workstation for you guys. These are instruments that go up when the market sells down. My two favorites are VXX and QID. Those are ones that I've actually really traded for many, many, many years, even back during the market sell-off. So we're going to start off with that, since that's the most relevant for today's markets. But let's go ahead and get started. Really pleased to be here on behalf of MetaStock. This is Ken Calhoun, president of the original Daytrading University and Swing Trading University, and many other sites. Wanted to get started with today's event. As always, all information is for educational use only. No advice about what to buy or sell or hold is being provided. By watching this, you agree not to make actual trades. So, if you've ever had one of those days trading, maybe even today on the big sell-off, blood in the street day on Wall Street today, my goal is to hopefully help you turn it around. I've worked with tens of thousands of traders since 1999, and it's a real pleasure to be here. So really excited about what you're going to learn today. I'd like to go relatively quickly through a lot of bullet points, exactly how to trade based on today's charts. And so I've got a lot of techniques and strategies designed to potentially help you make more successful day and swing trades in the upcoming weeks and months ahead. So as I go through all these different tips for our session today, I want you to think about making small before-after changes from uncertain hit and miss trading to more confident, well-thought-out entries and exits. One of the things I really like about MetaStock is the charts are so clear, and it's really easy to make trading decisions based on the information that's presented. And I'll show you exactly how I do it, and so look forward to sharing that with you today. For those of you who are new to working with me, you may have seen me in Stocks and Commodities, Active Trader Magazine, speaking at Money Show Traders Expos, where I get big standing room ovations. It's always fun. We have a great time. Let me start off with a quick trade management tip. This is a real eye-opener. I'm a real trader. I'm kind of keen on the fact that you should only learn from people like myself who can prove with brokerage, P&L, screen caps that we are real traders, because anybody can talk about charts, but you have to make sure they can back it up with real trades. Your goal as a trader is to make money. Mostly, I've got a lot of professional traders. Daytrading University, we've worked with professional traders. We've got guys who are institutional market makers and specialists, as customers and the rest of it. Any of them will tell you, any good Wall Street trader will tell you, the Chicago Merc floor traders will tell you, we don't care about trying to get right 70 or 55% of the time or 80% of the time. Here's a day in which I made $600 the hard way, a lot of scalps, being right only 30% of the time. And your challenge as a trader, and I'll teach you how to do this in MetaStock today. I want you to make sure that you learn how to scale into winning trades and take really tiny stops. Biggest stop loss was $40. Biggest win was only 170. I still made $600. Now, I don't know how many of you are day traders, and I've done as many as 320 trades in a given day, or if you trade larger size on more leisurely trades and go for larger P&Ls, okay? But, whatever you do, make sure that you figure out how to take stops that are so small that you can still make money being right only 30% of the time, like I was on this day. That's a real important visual anchor. If I were to share nothing else with you as a trader, on position size, and you can learn more from my colleague Van Tharp and the rest of it, but make sure that you're scaling correctly and that you're taking really super tiny stops with $1 commish broker. I use IB, that's inexpensive. Today's learning goals. I want to teach you how to spot price action breakout trades. I'm an old school pattern day trader and swing trader. I like to keep things simple. I do not use a lot of MACD, stochastic, Elliott waves, V-bands, Fibonacci, blah, blah, blah. All I care about is, can I buy at one price and sell to someone else at a higher price? And the way I do that is to use momentum candlesticks, cut patterns, and other professional price action breakout entries. So you're going to learn how to do that today. You're also going to learn my single favorite breakout pattern, which is a wide range candle at the right side of a cup, and how that works out. We're going to look at some examples from today's markets, really exciting, in both the sell-off and the rally charts we had. I want to teach you how to scan for breakout patterns, how to find what's worth trading. A quick tip, if you are a swing trader, do not swing trade, or I would suggest that you consider not swing trading any cheap, no-name penny stock under $20 stock. Trade things that are between $20 and $70 a share with at least a 1-point daily trading range and at least 1 million shares a day so that you've got some volatility to work with. The cheap $3 and $5 stocks generally don't provide sufficient risk reward, and the too expensive stocks like Google and Amazon, Netflix, Priceline, Tesla, the leverage isn't there. You're spending too much capital to get involved with that. So instead, I like things like SanDisk or Twitter, Facebook, or things, Adobe, name stocks, name brand stocks that catch professional traders that we make our living off of. So how to do that. You're also going to learn how to trade momentum entries with position sizing. I alluded that to a bit earlier. And then also tactics for precision day and swing trading for breakout charts. And it's a real pleasure to be here with MetaStock. Here is kind of the last, or I should say next to last, almost next to last PowerPoint slide. And then we're going to spend the rest of the time on live charts from today's markets. Here's a quick overview. You always want to trade things that are taking out multi-day highs. You want to, if you were to wave a wand over your trades, the number one thing that you can do, and don't take my word for it. Go back and look at your last 50 trades, and I will be willing to bet you that the ones that cause you stop losses are ones that were in charts, meaning you traded something that was inside the previous day's high-low. Don't do that anymore. If you want to make a single biggest strategic improvement in your trading, only trade when the S&P is outside of the previous day's high-low, and only trade stocks, ETFs, minis, whatever you're trading, and Forex pairs outside of the previous day's high-low range. If you do that one thing alone, that can dramatically improve your bottom line. It did for me. Make sure that you look at wide-range candles. I'll teach you what those look like. Strategically, you want to take a lot more shots at the market with many small stops and scale into the ones that work out to win. So you're throwing a lot of darts at the market, and I don't particularly care what percentage of those work out. I expect that the majority of them will, but even if they don't, I control for that with small stops. We have a pattern called acceleration ramps you'll learn about. We're going to focus on the upper right part of the charts and use MetaStock plus minus for scaling the time frame, for multi-time frame analysis. So a very good professional approach. We want to keep it simple. I don't know about you, but I like to make money trading, and the way I do that, at least in my own professional trading accounts, is to focus on the simplest, strongest price action breakout combined with careful trade management, and always develop a profit-taking mindset. Here's another quick P&L example before we hit the charts. I want from now on, and I've trained thousands of traders to do this. Every time you're in the money, say a couple of, I don't know how much this is for that day, it's maybe $1,100, whatever, it's over $1,000, or whatever day you're trading. Your unrealized P&L is what you pay attention to after you get into the trade. You use your charts, use your MetaStock charts to get you into the trade and scan for the best breakouts. But once I'm in the money, say $300, I'm not going to let that go against me, more than say $50. I want to take at least $250 out of that. I do not care if there was previous horizontal support or resistance. I don't care if there's a Bollinger Band. I don't care if there's an RSI, MACD, Fibonacci fan, Elliott wave, blah. Who cares? I just want to make money. All right, so that's something that I want you to focus on. Once you're in the money by a certain amount, whatever it is, make sure that you have a number or percentage, say 80% of the P&L you resolve to keep. So for example, once a trade is in the money by at least, say, $200 or $150 or whatever, you resolve from now on to never let the market take back more than 20 or 30% of your unrealized P&L, because your goal is to sweep profits off of the street. So let me teach you how I do that. using our chart. So let's get on with it. Here is today's S&P. Blood in the streets. Booyah, big sell-off. They just said no. They didn't want to buy. Here's a quick tip. One of the things you want to do for directional trading is make sure that you're using closing ranges and not just opening range breakouts. Closing range triggers are often really good for directional trade entries. Today we had a gap fade. The market gapped up and sold down. The sell trigger isn't anywhere in here. The sell trigger is just under the closing low. Look at the last 30 minutes. Just use your horizontal tool, the horizontal line tool, really handy, and just set your trigger, say 30 cents under the low of the closing range, or above that if it's making a bullish breakout. Now, how do we trade this kind of market? These are spiders. Well, personally, my favorite instruments, and I'm trading these, in disclosure, I'm long these right now, is to trade our inverse or bear ETFs. And here's one. QID is one of my favorites. It's one that I've done hundreds of trades in. You can see proof on my tradingtalk.com forum. Real trades I've made. I think that's important when you choose an educator. Make sure they are what they claim to be and not just a chart talker for a living, but they're actually a real trader for a living. There's a wide range. The trigger point is at the 2-day high. Now the trick is, what's the trick? The trick is always avoiding false breakouts. The single best filter I've used is 3/8 of a point back in the fraction day, back for those of you who traded back in the 90s and up until 2002, you remember. What I like to use is, and here's a good example in today's charts, of just how well this pattern works out. Notice, please, the wide range candle. Okay, this is a candle. This is today's charts, right? I'm a real trader. I can pull up charts and I know how to trade. I'll teach you guys on today. You can look over my shoulder and look at my trading account. I'll teach you guys how to trade. Here's a wide range candle. The whole real body is at least 1.5 to twice the whole real body of the previous candles at the right side of a cup. That's a long signal. Say 20, 30 cents above that if you're for a day trade. For a swing trade, you get it maybe 50 cents above the high. Use a 1.5 point stop, no more than that for any swing trade, and no more than a 20 cent or so trailing stop for a day trade. Anyway, this is a good example of the ultra short Qs, also known as the QID. These are bear or inverse ETFs that go up when the market sells off. And I'm long this today, and you can see why. Ka-ching. Anyway, ka-ching. Anyway, you can see why. If television personalities can do it, so can I. Yay. So always be on the lookout for a bullish cup. A cup looks like the letter U or looks like a coffee cup. Coffee's good to drink if you're a trader. I'm highly caffeinated all the time. Don't get to sleep too well, but ask me how well I do with my trades. Anyway, you have a bullish cup pattern with a wide range candle. Now, one of the things that I really like about the MetaStock charts is if you're using the plus and minus down here, it lets you kind of zoom in quickly to see nuances of how strong that candle is. So this is something I would look at to see, for example, is this at least twice the height of the whole real body here? And I've published this strategy in equities and other trading industry journals, and I spoke on this at the Traders Expo in Vegas back at Caesars. But anyway, that's one of the key patterns I want you to look for. And this is a very good breakout pattern for our current markets to look at. You just buy new highs. Now, how do you scale in? If you're swing trading, I like to scale in every 2 points. So let's say you bought 58.20. Where would be your next entry? I'll tell you the secret to position sizing and scaling. It's that you can't get in too early after your trade one, because otherwise you should put in a hard stop at break even after trade two. So let's say I get in a 58.10 on this chart. Let me blow this up so it's a little bigger. 58.10. Say buy there. That's a good likely Cowloom breakout. Cup pattern, wide range candle, boom, we're off to the races. Even with a 3-line break and a shooting star, it's still powered on up to new highs. We had a bullish engulfing here, right? Bullish engulfing. Again, for candles, learn from Steve Nison, my longtime colleague. He's the world's expert in candles. I learned from Steve personally. He's the best guy to learn from. Anyway, I like to use wide range candles at the right side of cups. The reason that you don't get in too early, let's say you buy 58.10 or 58.20, the next entry needs to be 2 points up for a swing trade. So that would be what? 60.2. So you're not going to touch it between 59 and 60 because it's likely to pull back and chop and give you some grief. And you still want to keep this trade alive. Now, when you enter a trade, this is a very good professional strategy. Let's say, looking at the I'm trying to enter this here. If you enter a trade here, you put the first stop 1.5 points down. The second trade needs to be, in this case, I would put it all the way up at 60.2 up here, and at that point you then put a stop at break even, put a trailing stop at scratch, and occasionally you'll get some scratch trades, but you get in on the initial breakout, you survive a pullback by not getting in too early on the secondary. That took me hundreds of trades to figure out. I used to always get in here, then I'd get in there, and then it'd come back down and stop me out all the time at a scratch trade. I mean, no harm, no foul, but I wasn't making money. So what I found for moneymaker trades for my scale-in trades was put a safety buffer or wait a bit for a swing trade, a couple of points. For a day trade, you can use maybe 70 cents or so, but for a swing trade, add every 2 points on your breakout. Now let's take a look at this other one. This is the VXX. This is another one that I'm trading. And again, just look at the power of simple bullish cup with a wide range candle. It's larger than the previous candles. Comes on up, congest, pulls back to the exact support today. By the way, here's a quick tip. When you're evaluating the merit of various trading educators' strategies, make sure that what they teach you works on markets first. Not that they're just cherry-picking some charts that they pulled out of the 7,000 universe of possible charts. I mean, you could make it, you could come up with a, trade of, I don't know, Jupiter's in retrograde in Venus, and there's a 20-mile-an-hour, crosswind in Melbourne, Australia indicator, and I'm sure you could pick 3 or 4 charts out there that would support that. That's fallacy. I used to be a corporate statistician. I'm dual degreed UCLA, Cal State Long Beach grad, 15 years in industry as a corporate quality engineer and statistician. I'm a numbers guy. Look for reliability, look for validity, look for consistency, look for cross-applicability of the strategy, not just to cherry-pick vendor charts that these guys pull out of their charting software, but that I will be polite. Get a laugh track, but make sure that it applies to market-tied indices like the VIX instrument, the VXX, or the S&P, something like that. If it applies to that, then, and only then, do you have a reasonably good chance of applying that to whatever you're trading. Because odds are a vendor's going to be over there saying, hey, look at this thing, it worked out great in Tesla. But you try it, say, in Netflix or SanDisk or something, it doesn't work out, and you wonder why. Well, it's because it wasn't a valid strategy to start with. So a good professional breakout strategy is, look at this. Data point there, data point there, data point there, data point there. How many more data points do you need? You have a bullish cup breakout, previous resistance becomes new support. We have a bullish engulfing there. Okay, you buy above the high of that. Even if you miss that breakout, that's a second chance to get in. Again, maybe 30 cents above the high of that bullish engulfing. After a downtrend, you have a wide range candle wrapped around a small previous body candle, takes on off to new highs, right? And that's an outstanding good breakout. I'm in this one. It's a disclaimer. I'm in the bear ETFs. I know how to trade those. Proof. Right? And these are some other ones too, FAZ, SM. And this was back from when I bet 20 grand against Wall Street during the flash crash. I was going long these instruments. I was day trading these long during the market sell-off, and I was even posting, it's a few years ago, but market may sell off in May. So I think Jeff had put up a poll about, do you think it's going to be go away and sell in May? There's that distinct possibility. So if these instruments keep going up, you want to, what I'm doing is I'm rolling to cash in my open long swing trades in my stock and my equity and ETF positions and going into the bear ETFs on breakouts if the market sells off. So that's something to play with for the rest of the year if the market sells off. Remember I said that too. Just remember I posted those. The reason for that is this. Here's a daily chart in that VXX instrument. Back when the markets were selling down, this instrument shot up. This is back in the 08, well, it's 2010 when I was trading these long. These shot up largely. The market's been in a rally mode ever since the last few years. If the market sells off, buying new highs, above any cup pattern high in any of these bear ETFs is going to be your number one play for the rest of this trading year. Okay, so if the market does capitulate and sell off, I wanted to give you some good actionable tips, at least what I'm doing on my own capital accounts in both my Fidelity and my IB accounts for our markets moving forward. So, okay, so enough of our bear ETFs, but I wanted to start off with the most valuable information given. Today's S&P was a blood in the streets day. Again, for posterity's sake, this is what the S&P did today, and so that's why I'm teaching everybody how to trade the bear ETFs to go up when the market does this. Also, when there's a bearish engulfment, when it engulfs the closing range engulfment, that's also a particularly strong selling signal. This is the previous day's close. This is the current day's price action in the spiders, and you can see it engulf that. So really good pattern. Now let's take a look at some other breakout patterns to get you started with how to trade breakouts using the MetaStock platform, and I'll teach you at least what I do. Here's a good example of one that ran up last week quite a bit, First Solar. If we zoom in on the chart, you can see in a single day it ran, in my live room I had a long call of 57.10 and 60.4, and we nailed it. Anyway, it's moved up sharply. One of my very favorite patterns is to look for, and you know I'm the cup pattern guy. I like bullish cup breakouts. The trick is have a safety buffer of at least, say, 30 to 40 cents above the previous high so you don't get caught by a false breakout and it pulls back. I don't know how many of you've done that. Hey, it looks like it's going higher. You buy it and then it goes right back down. Well, put a safety buffer right above the cup pattern high for any of these types of instruments. Now, from a tactics and strategy standpoint, one of the things that you want to look for example, in this First Solar chart, you can see where would be a likely pivot. Well, that's an undecided candle. Looks like we have a bearish upper shadow. It's not a shooting star. Looks like a doji or spinning top. Anyway, it's an undecided candle with a bearish upper shadow, so that may find support. One of the patterns that I want to teach you about, one of the very favorite breakout patterns, and I published on this too, because if I don't, my competitors always rip off my ideas, is what I call a 1, 2, 3, and that's where you get a breakout to the upside, pulls down to around 50% of that range from the price elasticity, and then oftentimes continues its uptrend. So even if you miss the big breakout and you sit out on the retracement, there's often a bounce play. I don't like bounces as a rule of thumb. I like getting the first breakout, like I got a 57.10 on that day. But even if you miss that, oftentimes you get a breakout, pulls back down to around 50%. That's the only Fibonacci value of interest, and then resumes its uptrend. So you get in, say, 50 cents above the high. In this case, maybe 66.5, if it pulls down to the 66 and starts to bounce. So that's another breakout continuation or second chance breakout in case you missed the first one. Okay. Now, another one of my favorite patterns that you can often spot visually very easily is a 2-candle breakout pattern. And one of those, they're all over the place. I mean, I don't have to look far to find those. What's this chart? Tenet Healthcare. This was a good one from today's markets. By the way, does it help that I'm using today's charts? I don't know about you, but I am beyond sick and tired. I can't even sit through other educators' webinars because they're freaking pitch fest and theoretical crap looking at cherry-picked charts of not the real markets of, 2 or 3 things that just happen to coincidentally support the vendors. I'm kind of a big vendor basher because I don't like most of those people because they're not honest. So I'm not a big fan of vendors. But even though I'm in that role myself now, it's I prove I trade with real P&Ls. Anyway, the point is, one of my favorite patterns is this one. We see a small whole real body followed by a large candle. Okay, small candles followed by large candles are usually good. And in this one, you can see, let me point that out for you. There's a small whole real body. There's a large whole real body. The cup, the entry signal is going to be, say, 30 cents above the high of that second red moment or second green momentum candle, which would be after these 2 reds right here. And this is, again, a wide-ranged candle at the right side of a cup. Very simple. These are very easy, and they're very powerful, and they're very effective. It's my single favorite trade. I've done thousands of trades with this. I've traded millions of dollars worth of stocks, ETFs, minis, and Forex for the last 15 years. I'm a genuine trader. And, this is easy, right? This is stuff that once, kind of like those word search puzzles. I used to travel all over the world. I used to be a consultant for dozens of Fortune 500 companies back when I ran a training business, and spent a lot of time in airports going to those newsstands and getting those word search puzzles and other things to kill time. This is back before we had iPads and Kindles and whatnot. You had the old school, I'm 50 years old. So anyway, just turned 50 too, by the way. Anyway, the point is, until you see this, the clue or the pattern to look for, you wouldn't have known to look for it. Now I'm giving it to you, the pattern. So now I want you to be on a hunt, be on a rampage for looking for instruments like this. We have small followed by a large whole real candle. Resolve not to buy until it pulls back and then takes out new highs with a bullish cut pattern with a wide range candle at the right. And even if you miss the first entry, let's say you're uncertain here, and that's fine, you often will be. Well, just go in 30 cents above the high of that candle, which would put you in up here. Still ran up nicely for us. Now, here's another quick tip. Gaps, notwithstanding today's gap reversal and the spiders in the markets, generally or often gaps that take out new highs in the pre-market will continue to new highs in market. And you can see here we had an opening range minor gap continuation, and that's my single favorite breakout play. Or minor gaps less than, say, 5%. So I don't buy it if it's a $30 stock that, jumps up to 45 or something, but if it's a $30 stock that goes up 1.5 points, say 5% of the $30 price, then I'll buy new highs. So minor gaps that continue puts it on the radar. Shooting star says, oh, let's avoid that for now. Let's wait and see what happens. Here we got that 2-candle pattern, and we got a bullish cup, and voila, we got a continuation play, right? Also, what's the story of buying and selling pressure on breakout continuations? When you take a close-up look at the candles, often, I'll just admit I often get out at the first sign of congestion like there. I don't get the last piece of the run because I often get done trading. I like to trade between, say, 9:35 and 10, maybe 10:15 at the latest. I don't like to trade after 10:20 or 11 o'clock because typically you get the sideways chop and churn. So I like to trade the opening range break, and then I'll often get off and maybe miss a minor secondary run, but at least I nail the first piece of it. And that's a good, something to get in on, or a way to trade is look for those first initial 1-2 patterns, bullish cut breakout, continuation, and when it starts to go sideways, even though I didn't see a shooting star or a bearish engulfing or even 2 red candles, if it goes sideways, I'll often get out of the trade just because it's congesting and I don't see evidence of new buyers yet. You can always buy new highs. And that's a tenet of a good professional breakout trader, and I'm one of the world's top, is you look for buying new highs. You always play in the upper right side of the chart as a breakout trader. You get killed if you try and buy pivots. You get killed if you try and trade cheap, crappy penny stocks or sub-$20 no-name stocks with no volume and no volatility. You want to trade instruments, at least I like to trade instruments like Tenet or the BXX or the other ones that actually have a shot at moving. So THC, a good example in today's charts of a good breakout strategy pattern. Now let's take a look at my biggest trade of the year. I have been long MGM since last year. That's my biggest position trade. I've been scaling out lately because it's been dropping here. But this is my biggest, longest position trade in my Fidelity SEP, rolling in a big chunk of my retirement into this thing because it ran up nicely. I'm going back to cash now because it's rolled back down under that previous support line 1. I was using 26.50 and 25.50, which took out today, was my second S2 level. So I'm not excited about it for new longs, but I've been building a position over the last year and a half, and it's done very well for me. But now's the time to get off the boat because we have this bearish reversal. From a breakout trading standpoint and a price action trading standpoint, what does this tell you in terms of clues? Obviously it's been correct to be long in. MGM's my favorite stock, and I stay there when I go to Vegas, and I did my seminar in Vegas, my colleague Peter Bain back in November too. I like MGM. Anyway, I like the poker room, but in the Hakkasan's. But the point is, what do you notice here? What's the key strategic technical weakness? The depth of the pullback now is bigger than any depth of pullback in the last year and a half. The depth of the pullback is a seller's pullback. And so if you're doing longer term trading, it's kind of like an expanding average ATR signal. Let me draw the trend to illustrate. If you connect the dots here, Notice, please, this recent pullback range is steeper and larger than this previous one, just slightly, but yeah, it's almost a point deeper. And so that tells me we've got increasing sellers in play here. So I do not want to stay long this instrument because the selling pressure is starting to pull back. I can always buy on the count of 3. I can always buy new highs. I'm not going to hit MGM long unless it breaks 30.5. Again, not a trading recommendation. This is where I am selling my open long, I call it long-term swing/position trade in MGM. But the reason is, and you can apply this to any of your charts, the depth of pullback. Again, always look for these price action clues. As a professional trader, we're always looking for reasons to get in and out of our trades, right? And the reason here to get out of the trade is the depth of the selling pressure is more than here. Now, I don't need any moving average. I could put on the 50, 100, 200 MA lines and whatnot, but I don't need that. As a professional trader, I know to trade off price action. So yeah, it's been a great ride. Now it's time to say goodbye. And so I'm getting out of this. I will rebuy if it gets over 30.5, but I'm going to cash in my MGM because it did really well for me and I want to lock in as much profit as I can. You probably also made the mistake of, oops, it goes back down here. And then you may, well, let me add to a losing trade now. I had made a lot of money, but now it's in the red or break even or whatever. And so let me buy some because surely it'll come back. No, that's completely wrong. You only add to winning trades. You never add to losing trades. Only morons add to losing trades. Okay? Just say, no, epic fail. Don't add to losing trades. You only buy new highs on continuation breakout runners. So you always scale into new longs. You always scale out of anything that misbehaves. Like a bad relationship. Anyway, sorry about the sound effects. I can't resist. Saw a certain famous TV personality use a special box. So anyway. Got it, add to winners. And one of the things you want to do is look for those kind of price action triggers for entries and exits. So another quick tip for new entries, let's look at Bristol Myers. That's been on fire lately. I like to zoom this up for you guys so you can see. Bristol Myers, good. Here's that same pattern. Does everyone see that? And again, MetaStock makes it so easy to see. Just look at, and competitors are thinking about copying me, don't, because I've already documented this in articles in the trading industry at equities.com and other places, so I claim original ownership of the concept, and if people try and copy me, I have my lawyers send C&D actions and the rest of it. I'm one of the most widely ripped off guys in the internet. I founded the whole idea of trading universities. Now it's widely copied, but I'm the first to bat with that. I used to be a university professor for University of Phoenix. I taught 104 MBA and undergraduate courses in a variety of different topics, human resources management, managerial and supervisory skills training, back when I ran a consulting business and training business. Had 114 Fortune 500 clients total attended my training. So a really successful training business, but I don't like people, so I got tired of dealing with people. How many of you have ever had a boss who's a real pain in the butt, or employees or coworkers that you really wish weren't there? They're total morons. Well, that's why I got into trading, because I got tired of it. Many of my clients were great. Usually the general managers and the executive team were good, but there's always be that guy or that lady who's a real pain in my butt, and it got tiring to deal with that from a workload standpoint. So that's why I got into trading back in '99 and founded the first and original online university, Daytrading University. I also run Swing Trading University and E-mini University. I'm the original. Anyway, here's a quick pattern for you in MetaStock. One of the things I want you guys to look for is what I call acceleration ramps. It's a good visual price action pattern where you see kind of a bunny slope that then takes out a sharper angle breakout. You just buy new cup pattern highs, right? You know me, I'm the cup pattern guy. I always look for new cup highs. Even if you buy there and took a stop there and then you get in again, hey, you rode it, made a little bit, pull back, you waited, okay, you bought new highs, now it's in the money again. Look for this pattern. And the pattern is simply one in which it looks like a check mark or a hockey stick. It's where you can do this on daily or intraday charts, it doesn't matter. You're just looking for emergent new volume and volatility with the angle of the breakout line is sharper in the most recent trading sessions than the previous trend. So the trend strength gets sharper. You do not want to trade breakouts that are near vertical. Those will often, at the least sign of, without any warning, do the pullback. Now, often they'll do the Cowloom 1, 2, 3, the 50% retrace, but odds are you're not going to get it right. You're going to be like the person that buys there, or the person who shorts there and gets killed both ways. So don't do that. Instead, trade instruments that have relatively narrow bunny slope lines. My biggest winning trades are always scaling into, I look at a lot of these examples, even if they're itty bitty trades, it's 90, 50 bucks here and I make a few hundred, whatever I'm doing in my trades, or if I have an all red day, if I'm taking stops in my instruments, this is from recently, you want to keep your stops as small as possible. So for a losing day for me, that might be what it looks like, right? These are some real trades I've done in the bear ETFs. I was on the wrong side of those, and I took maybe $61 worth of stops, right? Manage your open P&Ls. That's one of the key things to success as a trader. And I'm an expert in trading the bear ETFs. I've traded them for years successfully. And one of the things you want to do is start off small. This is from my Fidelity account with my bear ETFs from earlier. You could see, in the money for a lot of these, but you still, let's say if I'm in the money $500 on an FAZ long, I'm going to sell it all or stop out and close that position if it goes down to, say, $450. I don't care what the chart says at this particular point in time. I manage my exits. Again, the chart patterns are for entries. Your unrealized P&Ls are for exits and for scaling in or adding to winners and trailing a tight stop to protect profits on the ones that are in the money and very tight stops to the ones that aren't making money. So you keep, your bad trades should misbehave like this. That's a professional traders look at the type of, you have maybe one decent trade, a few noisy trades, a handful of moderate wins, and together they add up. Okay, that's how you actually trade. These are real money trades I did. Okay, so that's the type of thing you want to learn from as a real trader, not these guys who just talk about chart patterns and can't prove they're traders. The chart pattern talk is nice, but it's more important and valuable, I think, strategically to look at entry and exit patterns. Okay, what else do we have? Here's an example of one Delta, an airplane that's doubled in value the last year, okay? DAL, the ticker, right? United's also been pretty good, but I'm looking at Delta because it continues on up. What are the signals that this is good for a breakout? Are there any signals? Well, one of the things you want to be cautious about is the story of buying and selling pressure lately. Don't get seduced by, hey, it was really nice for a long time, and then expect that in any way, shape, or form translates to how it's going to work for you. Because trust me, it's like the trading gods have it in for you, and you're just going to get stopped out if you try and buy new highs. So what's the problem with this Delta chart? I like the uptrend. I'll buy it over 37, okay? But the problem is, always be a skeptic, like I am when it comes to trading vendors who can't prove they trade, which is most of them. So I don't deal with most of them. I have thousands of traders, trust me for that. Anyway, the depth of the pullbacks. This is telling you got more and more sellers coming now. It's not an expanding range. That would be even worse. If the height from here to down there is even bigger, that's even worse. But we had a nice, nice, well-behaved, well-mannered trend. Oh, isn't that a cute trend? Okay, well, that's cool, but we had all these big pockets of pullback, and so that tells me to be more skeptic. As a professional breakout trader, it is my duty to buy the upper right side of the chart, but I scale that, or I position size that based on the relative strength of the pattern. With all these, this was strong, this not so much, I'll still take a shot, but instead of, say, doing 200 or 300 shares, I might only do a pilot trade, maybe 20 shares or 50 shares, because I don't trust it. I think it's going to try and screw me the first chance it gets. Say you buy 37.5, and that would be an official trigger I would use. 37.50, I'd scale up it. I would add, again, I don't buy 9, so instead of 39.50, punch it out one more to say 40.50. So the scale ends would be buy 37.50, buy 40.50 with a 1.5 point initial stop. But the problem with this chart is it's got these pullback depths, and you can see MetaStock's really good at identifying for you the problem here. I mean, look at this. What you look at, and I'm a professional breakout trader, I'm one of the world's top, and what I know to look for is the height of the whole real bodies of the candles, because that tells you the story, kind of like a Hollywood movie script and the behind the scenes, which I love watching that in movies. You guys watch that, the green screen, how they made it? Anyway. back on topic, Calhoun. We got these big red candles, these big honking red candles. So it's a big pullback. You can buy the bounce and a pullback and hope you get it right. That usually doesn't end well. You've got a lot of red candles that are emerging in the story of this instrument's otherwise relatively impeccable run up. Okay? So because of this emergent, and also notice too, please, again, this is a professional trader's perspective. This is, and again, you're competing against guys like me. You're not competing against those morons that talk about chart patterns and try and sell you overpriced trading systems. You're competing against, your real competition is guys like me, and we're the sharp pencils in the bunch. We're not the guys who, look at my magic green arrow, red arrow indicator. You too can become a millionaire trading. No, that's not how you trade, guys. You get laughed out of if you go into my Wall Street trader, the trading floors, the hedge funds or prop shops, they laugh you out of it. It's price action, baby. You're looking at price action and volume. The story of this instrument, increasing selling pressure, warning Will Rogers, danger. I'll buy 37.50. It's my bound duty to buy new highs. That's what I do. That's professionally I buy new highs. But my control for that is to buy lighter size because it is a kind of skeletons in the closet lately. It's kind of like going to a nightclub and meeting a woman that doesn't tell you about all the problems in her past. Been there, done that, got the t-shirt. Anyway, look for similarly clues in the charts. And the MetaStock charts do a really good job of honing that in for you. So if you see all these big red honking candles, even though it's in an uptrend, it's suspicious and I would not trust it. I would still buy new highs, but lighter size. So that's just a quick, trying to keep you guys out of trouble, right? It's in our shared interest if I can help you guys make money trading, and you can work with me 5 and 10 years from now. So I'm trying to give you guys the things that I've found work in my own trades, and hopefully you can start using this on your own MetaStock platform as you move forward. Now here's Lorillard. What do you notice about this? Here's a quiz. Again, I used to be an MBA professor, and I had 104 classes I taught total over, I think it was like a 6-year period for University of Phoenix, the country's largest private university. Great university, stock ticker APOL. Anyway, I no longer teach for them. I stopped back in 99 to found Daytrading University, because that's where I got the ideas. They were doing their online university for academic and business classes, and I got the idea, hey, day trading was hot, let me start a Daytrading University, an online university. Then everyone copied me, but I'm the original guy with universities. You can look that up in the domain whois registrar, dates of website origination, and you see, yeah, Calhoun was first. Everyone copied him. Anyway, what do you notice? Right there. Bazinga. Boom. The fellow fans of the comedy show, The Big Bang. Anyway, wide range candle at the right side of a cup. Remarkably good. Okay. And it's very easy to spot. Now, I can anticipate questions. Ken, is there an automatic scanner that... No. The best software in the world is what's between your ears. It's your head. Professional traders, we use it. You guys should too. I mean, eventually I'll get some kind of breakout scanner developed for MetaStock because I think that would help save time for you guys. But in the meantime, as we are learning how to do this, and it's better for you to learn how to roll up your sleeves, kind of like back when I had a 77 Olds Cutlass and I was underneath it fixing it all the time back in the day with a 9/16" Craftsman wrench from Sears and swapping out parts, and used to go to the auto parts stores. Now I drive a Camry. I've never even seen under the hood, right? It's drive perfectly. Anyway, the point is, you want to learn how to roll up your sleeves and tear apart the charts yourself. Bullish cup pattern. Looks like the letter U. Here's the first one. Do we have a wide range candle? So let's say, for argument's sake, let's say you're just watching this. Let's simulate the passage of time today. When dinosaurs roamed the universe. No, actually back at 11 o'clock today, baby. Look at this. So you're looking at this, you're saying, okay, Calhoun said, wait until a wide range candle. Is there a wide range candle yet? No. And by the way, you never buy right under the previous high, because anybody who happened to get in long down here is going to be selling to you there, which is why you see this doji type uncertain narrow whole real body candle, because all the guys who are long or say position trades, they're looking to sell into previous resistance. So they're looking to sell to you guys here. So you don't want to screw around with buying it under resistance. That's the worst place to buy. Second worst place is to try and guess at a bounce. That usually doesn't end well. It usually will go against you and wipe out a lot of your money, and you don't want to do that. Aha, we have the wide range candle that Calhoun was talking about. So what do I do? Okay, well, eyes right. Where's the right side of that? Around 52.85 or so, 52.80. So let me add 30 cents to that and buy it over, say, 53.10, and I'm off to the races. Ka-ching. So got it. Wide range candle, or I'm sorry, wide range, a wide cup, a bullish cup with a wide range candle, and you buy, say, 30 cents or so above the high. You can experiment with getting in a nickel or dime above the high, and that's fine. But one of the things that's really easy to spot on your MetaStock charts is just look for a wide range count the right side of a cup. It's a money play. It's very, very good. I expect competitors to copy it, but fortunately, I've taken the foresight to publish articles at equities.com. Currently, you can see me on the front page there with wide range candle. Anyway, they've established precedents of pattern skill for that. So anyway, look for that pattern in your charts. It's a very good, consistent pattern. I'm always looking at, consistency, reliability, validity. How well does this work, not just in 2 or 3 charts that I happen to find today, but big picture overall, how well does this work? And you'll find that it works very well. Just test it. You can see why I have thousands of testimonials, including dozens of video testimonials across my network of 70 plus active trader sites, right? I'm a boss in the industry. I know how to do this stuff. I teach you guys how this works. Test it for yourself, and then come back 6 months, and I double dog dare you to tell me, Calhoun, that wide range candle doesn't work, because it does work. Just test it. Pick your favorite charts. Now, what do you notice? I'm not doing this on crappy $3 stocks. I'm not doing this on Netflix and Amazon $150, $200, $300 stocks. I'm using this on instruments priced between $20 and $70 a share. Okay? What to trade? Greater than 20, less than 70 per share, at least 1 million shares a day volume, at least 1 point ATR daily trading range. That kind of narrows the universe of instruments to, actually what's worth trading? Okay? So keep it simple, keep it strong. Now, what do you notice here? Let's say you got in on this. Let's say you see a bullish cup breakout. There's a wide range candle. You got in here. We see a bearish upper shadow. Not quite a shooting star because the lower shadow's too low, but we had a bearish upper shadow. What would get me out of this is the fact that we have all these itty-bitty flat candles. After these wide range momentum, that's another breakout strategy. How to get out of trades, how to exit. Tighten in a trailing stop to no more than 10 or 15 cents under the inside market if you're day trading, or 50 cents if you're swing trading. If you see a pattern in which you have wide range momentum candles that then promptly run out of steam and you see flat candles. Now in this case it still did okay, but likely I would sell it in this region just because I'd be nervous long, right? I got in long, I'd sell it at the first sign of say 2 or 3 candles going sideways, flat candles, also known as melted candles or flat candles, after a nice wide range breakout, okay? So another good breakout strategy to keep in mind. So I want to keep you all, on the right side of making good exits as well as entries for at least how you trade using your MetaStock charts. Kind of went through and picked out the best, and that's kind of a hint, is, take mental note of the charts, right? The ones that I'm mentioning, things like SanDisk and First Solar and Twitter, and this one FIVE, it's a gap up today, THC, Tenet, DGX, Quest Diagnostics, a nice gap up that pulled down at a 50% bounce today. These Seagate, MGM on a daily, cable today, right? The pound US dollar is something pretty good. Anyway, for Forex traders, you really want to focus so much, I'll tell you, and this is lessons learned. You have my word on this. This is the truth if I was telling, family and friends and all that. It's much more about the money management than it is the chart patterns. What was a real eye-opener to me years ago, I read a book by my colleague Dr. Van Tharp, in which he said some study that he'd done or some colleague had done shown that random entries combined with position sizing outperformed proprietary, specific signal entries to get into trades. It's just the money management made up such a big percentage of the winning trades and the profits in that study. It was even more important than the specific entry signals. So that just validates what I'm teaching you guys. You're looking at candles are absolutely stunningly good to use. Learn from Steve Nison. You can learn my Western cup pattern breakout patterns, and you're looking for these. And just every time you see this, a bullish cup, minor gaps that continue are my favorite plays, and odds are you're going to miss this, and you're going to sit on the sidelines. But you got a second chance. You got a new shot at it somewhere in this grimble, in this chop and churn. Or even if you miss that, you get another shot at it. Previous resistance becomes new support. This is SanDisk, right? This is not some obscure chart. I just picked this one out of my watch list today because it was a good mover. Anyway, these are the type of charts you want to trade. Bullish cup breakouts. Stay out of the side, the sideways chop. Or even if you get stopped out, you take another shot at the next breakout, the next breakout, the next breakout. So here would be a new breakout. I was like, I'm not a big fan of looking back here. I don't get paid for being right back here, right? I get paid for being right if I buy 83.50 from you and sell it to someone else at 86.50. I'm a trader. I'm in it for the money. Like Han Solo from Star Wars said, which I'm a big sci-fi fan. Actually, I like Firefly is my favorite sci-fi story lately. But anyway, the point is with Nathan Fillion, who's now in Castle, a great TV series in New York. But the point is, I'm in it for the money. I'm not in it for the revolution. I'm not in it for being a chart pattern whiz. I'm in it to make money. So how do I get paid? I get paid if I correctly buy 83.50. Maybe I'll take a small stop at 82.50. But I buy again at 84.25. And then I sell to someone else at 86. Then I buy again at 88, and then I scale in up at 90, then I sell to someone else at 93, and so the battle goes. Endless quest for money in the markets. And what you're looking for, the strongest breakout patterns using MetaStock charts, what I like about this is it does a very, very good job of instantly identifying. And again, remember, you're competing against guys with my brain power, right? I'm UCLA grad, I'm multi-degree, certified genius, 164 Stanford Binet. I'm in it to take money out of the markets. You're in it against guys like me. You're not in it against these chart pattern vendors who aren't even real traders or trying to sell you stuff. The real competition is guys like me. And you better bring your A game if you're going to make it, right? Because I'm in it to take, whoever's money I can out of the market. And so you're fighting guys like me, right? So be equipped to trade like that. Okay, anyway, so here's the patterns to look for. Let me get rid of the horizontal lines here. There's probably a faster way to do this. Let's take a quick look at this chart. Here's the first pattern. Make sure you're always looking for minor gap continuations. Minor meaning less than 5% of that equity's price. So for a $60 instrument, that's 3-point gap. Was this over 3 points? Yes or no? No, it's only about a point gap. So that's good to go. Good breakout continuation. Even if you miss that, the next long signal is yielded by a wide range candle at the right side of a cup. Okay, now your buy trigger isn't until price action takes out, say, 30 to 50 cents above the high of this. So that keeps you safely out of the pullback. Do you get that? That's really important you get. Look for a wide range candle. Resolve not to buy right at the right side of the wide range candle. Wait until, say, 50 cents or so above that wide range candle at the right side of a cup pattern or congestion band. Okay, that gets you in on the play. That's how you trade. Or even if you miss that, let's say you're late to the party. Well, here's yet another wide range candle just a few days back, right? And that's at the right side of a cup. Wait to get 50 cents over that, so you're in at 79 and change. And ka-ching, you're off to the money. So that's SanDisk. Those are the type of patterns to look for. Wide range candle at the right side of a cup. Out days, again, that's going to be an out day. If you buy the signal, it should be 50 cents above the high. That's outside of previous days' ranges, or outside of previous congestion boxes. So those are the kind of momentum plays you're trying to get for as a trader. And again, there is no automated way to do this. It's just a lot of, you click through your dang charts and you find out the patterns that I taught you. You look for them, and if it meets the criteria, then you take your shot. And even then, you expect you're going to take a lot of stops, and that's what small stops are for. But you grind out thousands of trades over the years, and you start to pick up a few things, right? You're going to have some red days. Make them small red. Hopefully, you're going to have some green days. Don't swing for the fences. You're not out there to make, $6,000 in a day. There's a moron saying they're making, these big, huge 5-figure trades and taking $3,000 stop losses. Just say no. You should never be taking more than $200 or $300 on a stop loss in your life for the rest of your life as a trader. If you are, epic fail. If you want to be a legendary winner as a trader, you've got to keep your stops as tight as possible and learn from professionals and be happy with your $400 in a day and you worked hard for it. So what? Where else in the world can you make $400 sitting in front of a dang computer clicking on the mouse button, right? Click, click, click. Ka-ching. Even in this way, I lost $25 and I was paid badly for all this work. Okay, well, and I mean, I'm very honest. I'm very upfront. You're going to have days like this as a trader where you're going to take small stops, but still, a handful of little itty bitty stops, I took my shots. You know, the next day's up, I was able to make something. So, you know, don't be out there swinging for fences. Don't be expecting that you should be taking large stops. That's how you lose your money, and I don't have a chance to work with you, say, in a year or 6 months or a year, 2 years from now. If you've lost all your money because you've been incorrectly trained by people that are advocating large size entries and exits, you're not going to be around much, longer. And, that's the truth. So what you want to do is don't gamble and make sure you're trading the best of the breakout patterns correctly, and you're looking for these kind of pattern nuances of entry and exit skills to get you in and out of these things. Okay, last chart here. Let's take a look at Quest Diagnostics. One of the really neat things about the MetaStock charts too is you can instantly just go from your 5-minute, be a little patient waiting for your 1-minute charts. Okay. You can go to daily, weekly, monthly. 5 minutes. For the purpose of this, when I'm day trading, I use 1-minute charts, by the way, and time and sales for quick entries. But when I do these events, just to make the charts clearer for everybody, I like using 10-minute charts. Anyway, one of the patterns that you want to look for is often, like I say, if you get a gap up, you'll often, most of the times, gaps continue. Today, the whole market kind of sold down, so an exception. But oftentimes, you'll see this play where you see a gap up, it sells down to around 50%. That's around half. Again, you just eyeball the chart. That is around half of this trading range, right? From here to there is around half of that range, and then it bounced. You're looking for those kind of charts as you're looking for new entry setups on the right side of the play, right? So for new entries, and you're looking for, let me put this on a daily chart so it's easier to see. You're looking for daily entries. We have a story of net buying. A small whole real body, large whole real body candle led to new buyers. Just like this pairing of small, this is Quest Diagnostics, DGX, as in David Golf X-ray, David Golf X-ray, Delta Golf X-ray, use my phonetic alphabet. Small followed by large whole real body candles often leads to new buying price action. That's another simple one to put in your playbook as an active trader. And the neat thing about the MetaStock charts is it makes it really easy to spot those patterns. So I hope I've whetted your appetite and shared with you some things you can do. If you want to join me for my free Saturday shindigs, I'm up to over 2,800 registered every Saturday. You're welcome to go to Daytrading University, click on the GoToMeeting link there, and sit in those for free. They're only 20 minutes. They're really fast every Saturday. But thanks so much for being here, and I highly recommend, if you're not yet trying MetaStock, give it a shot. Give it a try, because it's really clean charts. The main thing I like about MetaStock charts is that it gives you a really good way to zoom in on or hone into multiple time frames and spot the very strongest of these breakout patterns relatively easily in our current markets. And so it's a really good tool set to use to add to your toolkit as an active trader. So anyway, on behalf of all of us here at the Daytrading University, the original, keep an eye on QID for this next week. If the market continues to sell off, it may well keep going up. And thanks, Jeff, for having me. And thanks to all of you for your attention and your time today. This is Ken Calhoun, Daytrading University, coming at you live with how to trade breakouts in MetaStock.